Start streaming. We're gonna melt up. Really? Or we gonna melt down? Really? Or we gonna melt up? We're gonna melt down. Not sure. Not sure. Not sure. My keyboard's on the fritz. Good afternoon, Randy, Luke, Sonny. Well, I don't know. It's not really much to say about the price right now. So usually there's announcements beforehand, and then the meeting, I think, at 2. I don't know. Lately, I've been kind of like forgetting a lot when it comes to FOMC. I always forget when time it starts and all that junk. Nuke. Well, while we have a minute, yeah, I'll look at it. Interesting. I really don't know why this is selling off as badly as it is, but it's gone. You know, if it can manage to get low enough, be curious. I think yeah. I think that NU is a really good trade coming up. If you guys don't know what that is, it's like a Brazilian and some other places, like online banking. I know what you said. Actually, you said NUKK, not NUKL. So which is it? Well, point is, each consecutive dive on this 4-hour and through this $11 mark has yielded some pretty big motions. And it doesn't really look like NUKK. Got it. It doesn't really look like it typically goes lower than about 18. And that's about as oversold as it's gotten. And in the past, it's reversed before then. Maybe over here, I guess this was in 2022. Got a little bit lower. I think, much like what we saw back here in this sell-off, I think that once this is over, it's probably going to have a pretty big reaction. And it's got gaps now all the way up to 15 again. I mean, it seems kind of crazy to go from 9 up to 15 and then come back down to like 11. But right now it's about a 786 retracement. So if it breaks this line, I'm going to be probably trading it. I think it's going to be a really easy trade. I don't know how long it'll last, but there's really nothing wrong with NU. So I really don't know why it dropped as much as it did. That's just kind of the nature of the market. You make runs, you make retracements. So I suspect, part of me suspects they're going back for like about 1050, which is where we're at. It will be a big 854 kind of retracement, but anyways, I think it's a really easy setup. If it breaks out, I think it's very, very, very straightforward. And for people that are always on here saying they don't make a lot of money or this or that, I mean, what this is. It had a 1-to-8 split. I mean, what do you want me to look at? Are you asking if you should trade this? Because I can't tell you that. But common sense would say that's probably not a good idea. I have no idea. I don't know, man. I have no idea. It's just a massive short squeeze, you know? A lot of this stuff isn't easy to predict, you know? I would suppose that down here, then maybe there was something that triggered it, but down here there's not really much of anything except a break. I mean, and even that, it's like I'm like, I guess you could argue this is a Wyckoffean bottom. Like there's a auto reaction, and then it goes up into a phase B top, comes down and makes a phase B bottom, generates a creek. In that regard, it's kind of like anything else. You know, it may have made a small spring at the end and just check. It doesn't even look like it did. It looks like it made a higher high. So, you know, I don't know. I mean, it almost perfectly, like within moments, it seems this is a 4-hour chart. It just jumped the creek. But I don't think anyone in their right mind would have looked at this and been like, it's going to go from here all the way up to 250 all of a sudden and then just run up to like $50. You know, it's maybe a lot of similarity with what we saw on the original run-ups for AMC. And I'm not seeing a lot here that would even lead me to believe it would go significantly higher than maybe like 5, or at most this level at like 6. This is an S-curve, and you could call it a shallow S-curve if you want, but it really is just an S-curve, so I'm not sure. You know, maybe, I don't think that even matches. Every trajectory in the market is like a possibility, but most of the time you would not expect it to go to like the most extreme possible zone. Like if I were charting this before this move happened, I would probably be suggesting that this right here, again, is the triangulation right there. And it may be going up to like $6 by January 10th. It's kind of like what we saw, what we see with like AMC and other stocks. Like if it can make that bottom, that usually ends up being a pretty good indication. If this were like a spring and then it jumped over the creek, or jumped over here, made support, jumped over the creek, you know, it might have been a pretty easy to trade. And I would have been like, oh, I think it's going to go up back, try to recapture 638. So like there's nothing else here like to look at to say, oh, it should have gone that high, at least right now. You know, on AMC there were historic levels of like historic trends, I suppose, that could have been met, but that's not this stock. This is very different. So nucleus, maybe I would have suggested like this is some kind of a cat ear, and like maybe that you could like maybe say, you know what I'm saying, maybe a lot, because it's like, how would I make a case for this? I would suggest this line, but that was before it went from like 70 down to like 2. And at this point, you're like, well, maybe it'll just go there. Maybe it'll go all the way up to 90. Maybe. I mean, if it hits that later, I guess we can come back and look at it. If it goes there later, I mean, it could go there. It's an auto reaction, but it's just too big. It's like humongous. This kind of stuff rarely lasts. So if it, I'd be surprised if it went up to 80, and if it did, I'd be like, okay, maybe there was a technical involvement in the play by some institution. But like for now, I'd just be thinking it's about to dump. No matter what happens, I'd be like, oh, it's probably going to dump. Because like everybody's going to be taking profit who was in it. I'd say lucky enough to be in it, who just happened to be in this at the time. You just made like a fortune. You're probably not going to just sit on it when it's sitting up here at $46, and it was not hours ago, it seemed like. Only a few trading sessions ago, it was down here at 150. So yeah, I mean, look, like I guess the technicals that do support it would just be right here, and this is just generalized technical analysis, right? This is what's called a divergence. So it was pressing low. Maybe that's it, you know, because it's been pressing low since November 2023, which kind of hard. Where is that? November 29th? Well, there it is. I guess that's it. So there is a quasi-technical reason for this, which is there's a divergence that was starting on, I guess, around the end of November when this thing first started having crazy volatility back here. You can see it was like a really regular chart up until that moment, and then it just starts going haywire. Just absolutely crazy right there. That's pretty significant because if you look at the RSI divergence that then follows for basically a year, it's a year-long divergence. It never, even though it's like walking down, it never drops that divergence. So I think eventually, I guess that what you would just say is like this just kind of finally cracked. Like it was a balloon ready to burst, and it just finally burst. And I think what we're seeing is a correction. I feel like I've said this before, but if I haven't, I don't see it all the time, but I see it sometimes. A lot of times that bearish or bullish divergence, whichever it is, wherever it kind of starts, tends to be a pretty common target if the divergence eventually corrects. Like that's what this looks like to me. It looks like a channeled divergence. So it's weird because like it didn't correct even after like this big pump and drop. It just kind of held up really strong, but you can see that's a channel now. So it's really strange, man. So maybe there's some kind of I don't know, maybe there's some kind of way to calculate something like that. Like I don't know how you would do it. I'm sure there's people out there that do it. That's pretty wild. But yeah, I'm sure there's people out there that look at like divergences and determine where it might go. But for me, if I had been charting it, I probably wouldn't have said like that's gonna happen. If I did say that, it would not have been like this quick. It would have been more moderate, like, oh, push up here, and then maybe over time you go up and blah 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 blah. You know, I don't see any particular reason to suspect that this would go up there. I mean, there's one trend from like back here. This matches. This is in May. Nothing here. Nothing here noteworthy. I look at tops and bottoms, right? This one kind of. So there are some trajectories from back in this time period between January 2024 and June. This one as well. These tops. I wouldn't necessarily say, though, that, again, this would have been an easy thing to... Nobody would have looked at that and been like, oh, it's definitely going to go. We would have said it's like got a serious problem and there's a serious divergence and there seems to be some trajectories that might point you really high back to this gap fill. So maybe that's another thing. Like another technical reason is the gap fill. So perhaps these were targeting like, hey, we want to go up and fill that gap. But it's not, again, it's not like a one size fits all kind of, like I would not have looked at that in terms of a wave and assumed that it's a big wave breakdown that's going to have like a 50%, like a 50-50 cross, right? So like take this down into consideration, then it suddenly looks right. And you're like, oh, well, Booksy, look, it's right there. That's like the halfway point. So it's a wave theory thing. Sure, maybe, but I'm looking at this after the fact. And it's too easy to do that kind of stuff after the fact. So when you look at it that way, you're like, oh, maybe this was somehow predicted, but with the splits and everything else, I don't think so. Predictable. That was the word I was looking for. Pretty crazy, huh? Well, so my expectations today were pretty flat. I didn't really expect a whole lot. I know some people were expecting it to kind of race up based on FOMC stuff. The thing about all these Fed meetings that I think we're all wise just to keep in mind, and most of you guys already know this anyways, so I'm kind of preaching to the choir here, but is that there's not really any reason to suspect that the pricing isn't being priced in. So maybe if it were like dropping, like we had dropped beforehand, you might say, well, maybe they're setting up for a reversal. Okay. Or maybe they're setting up for bad news, like the news is already priced in. Those are easy little mind traps that we get ourselves in because we think a lot about how an operator might plan it out, and it can be a little bit of a guessing game anyways. I would just suggest to you, and I think you guys would probably agree, that most of the time it's quote unquote priced in. It's not like an inversion move. So it's not like they're trying to subvert expectations on purpose. And the only time I've ever really seen FOMC not do something that was kind of expected is if there's sort of a surprise, and that doesn't happen that often. So most people will be expecting rate cuts to continue through the end of the year here. So that was planned out back in September or whatever, that would be likely. There would be 3 by the end of the year or something like that. I don't remember exactly when it was. So this would be the last one for the year. And I think that if it happens, then the market's not surprised by that. The idea of like, oh, they're not going to run it until this happens, I don't know. You know, maybe there's a little bit of trepidation, but this isn't like it was 2 years ago where we had come off of COVID. We had really bad inflation that was still like really elevated. We're in 2024 and the inflation data has been coming down since 2022. Objectively, there's not like a mystery to that. When people react to the Fed, they typically react, and then within about a few days, it kind of falls back in line with whatever the expectations were. And the last time I can remember having like a really big rug pull or something like that was the jobs report that dropped IWM like, 20 some odd points or whatever it was. I mean, it was crazy. I thought it was an overreaction. I've since been proved right, but at the time it was a long recovery. I mean, it took a while to kind of come back up. And I don't know. From a technical perspective, it should have just been a creek test, but it went lower than that. Anyways, point being, if I look at this where it's at right now on AMC, and I didn't know that FOMC was going on, what I would be saying is that 2 things. I could be saying that, 1, this is pretty much as expected. So when we came down, I made a little diagram, and I don't try to implement stuff that I don't think works. So if I put it into practice on the screen here for you, it's probably because I have confidence that it works. So like, I'm kind of amazed because there's a lot of people that even when things like this happen, they think it's kind of like out of nowhere, or they think it's like just random. And I'm like, it's not random. It's pretty easy to calculate it if you're looking in the right spots. When they drop it down like that, somebody's opening like a position or selling a position. And a lot of times we get like an equal and opposite reaction, and it's pretty common. So like when I did was I had measured it out from about 520 down to 461, 462. And then I put that on what I thought would be the bottom. Now at the time, I had suggested that maybe we don't go below 410 or whatever. And so I had put it down here, maybe even 420. I think I had put it like right off the bottom here, right? Now, did we go below that? Yeah, we went a little bit low. So should the numbers still be the same? Should we still expect it to go to 461 if it pops? I mean, there's different trains of thought. Like if I wanted to use the whole thing, I could have used the whole thing, but I didn't. I purposely chose the ledge because usually what I'm looking for is there's a pop and then there's like a little, again, I call them the cat ears, but it's just a ledge, and it's it's a point of, last point of kind of both supply and support, because support's trying to stop now a reversal, But ultimately, it's an opportunity for shorts to re-engage with the play one more time. This is usually a trap for both bears and shorts, to be honest, depending on how it goes. And we'd have to like walk through it to show you what that means. But like, I'm usually looking at this drop right here as the drop. So there's almost always like a gap and then some kind of crazy drop. And then once it finds support, that's the measurement of like the initial leg there, the initial move down, the initial position, if you will, opening. And then the unwinding of that typically happens down here. So if that were a short entering the play, once it reaches the bottom, they exit the play slowly or whatever, roughly going to have equal reaction. And it also is just the nature of generating what we would call a channel, because if this is a support down here and then this is where you stop to generate a support, even if you're like just like chippy chop, and then drop again, the point is like that has now generated a channel. It's not complex, it's really simple. So you've now created like an opportunity to channel. If you hit bottom later and you pop, you can have a very similar move, and it's going to be probably a similar length, though it's not always perfect. So what I'd said was that this move, if you go from top down to the bottom of the move, is roughly going to be equivalent, and that's what we're getting. So did it happen where I thought it would happen? No, but that was also meant to be a descriptive, not a prescriptive analysis. And I said that I would think that if it's bullish, it would stop at 410 and then react back up to 461. It went lower than that. That doesn't mean it's not bullish. It just means that it didn't happen the way I thought it was going to happen. But that doesn't mean we throw the baby out with the bathwater, as the saying goes. You don't just say, okay, well, it's all wrong then. I guess it's all wrong. We can't use it. No, you just move it down. Like once it started making its way across the creek here, which again was pretty obvious, like it broke out yesterday, then your expectations are right there. Like they're already set in stone almost. In that this reaction as an auto reaction should go back up to about 440, which is where we are. So if I looked at this again without FOMC, what I would see is right now is that there's two things that are most important. So like number one, we made a low below the low. So we had a low of 403, 402, that area. We definitely dipped below that. Yeah? Okay, so where else have we had supports? Well, we did have a support here at 402, but it wasn't like a huge one. It was just kind of like a one-off, like, bit back here. And then before then, we had support around 410. So those don't really like mean a lot to me. 415 was one that was pretty critical, I think, in terms of coming back up and then finding support again. And we know that it went down to 415 in that extended hours session right after earnings. So that would be a really good one. And then during regular trading hours, it double bottomed at like 417. So really the idea here is that you've kind of made a new low. Now you're coming back up above where that support is. This is not immediately to be assumed as a bullish move. And I spent all day yesterday kind of talking about potential here for an actual bullish move. And it seems a little crazy, but it is there. There is a lot of similarity between here and what we saw in 2021 with some pretty key indicators. And also generally with the price action, like overall, even though it didn't go as far, it's actually looking quite the same. Okay. But in order for us to then confirm that, what has to happen is very similar to what happened in 2021. You have to make a rebound and then hold the floor. So at this point, there's no reason to look at this and be overly bullish. There's no confirmations yet. All that we've managed to do is come back up. We've tested two things, well, three, I guess. One is that we've tested this this creek that I've got in yellow right here. This is the one that I was looking at right here, and then I would move it down to here. Both of those are relevant. It's kind of a pocket. It's where we broke out. We broke out along those creeks on November 22nd before that big wave up to 556. Okay, that's a pocket that we're testing right now. We're also testing the upward breakdown. It was a breakdown here right? This is a large part of what's caused this S-curve to appear. You can see the hooks on the 10th and then again on the 13th. Those are the moves, like the bounce on the 10th and then the hook on the 13th. That's the move across that line. It's also a move across, as we know, 430, which has been a historic support and demand, supply and demand spot as well for AMC. A lot of people have bought and sold off that level at different times for different reasons. We know it's acted as a sort of support at different times. And I look back on it and I'm kind of like, it is there, and I don't think it's wrong to say 430 is really important. It's been used 1, 2, 3, 4, and then probably arguably 5 times right here as a potential like support. So for an operator to come back up and check it and reject away from it would definitely be a cue in that we're either stuck or we're going to expect some downside. And it's a very important level. And it makes sense that it was measured out to come back here because it's checking like 3 things. It's also checking, I think, the main portion of this downtrend. Ignoring the wick, the body of these candles is really at like 520, both of these candles. And so most of the trading you would suggest that had any real holding power was probably right here at the top 520. This is a downward channel, for all intents and purposes. It would be easy enough to look at this and suggest that if it didn't break out, you'd be in big trouble. So when I was looking at it earlier, I'm like, I don't really care about the bear or the bull side right this second. I really just care about this value at 444. Like, if I don't know what's going to happen, and I'm just kind of staring at this chart and I don't know what's going on with the Fed meeting, and I don't think that there's going to be any real impact, whatever it is, I would still be looking at this from a technical perspective and saying it needs to come into this pocket about 450. And that's the first step. And if it doesn't even do that, then why say it's going to run, Now, that being said, is it reasonable to say that something like this could happen like it did in 2021? And if so, what would maybe that look like? I've got an idea of what that might look like based on what we're experiencing right here. So here's the idea. It's pretty straightforward. It's kind of a combination of what we talked about before. We talked about the downside here potentially and what that might look like if it were to turn around and turn bullish. We were relating it to like August of 2022. But I think that looking at it now, it does seem fairly straightforward that this is like a double top into that, at least for now, into that that ice level that was rising. What my expectations would be if this is indeed bullish is that this, when it comes back down, generates like a parabolic move that breaks to the upside. And this is the thing that I'm kind of like dancing between the two ideas. This bottom would do well to not make a lower low than like 403. If it can hold 415, even better. But I'd be looking at 403 specifically if it dropped and say like, okay, it needs to hold, right? Because previously when it came down, it tested this lower creek. It didn't hold up very well. When you look at the overall picture, you're like, no, it didn't really. It kind of pushed right through it, right? So if it comes back down, it needs to make a higher low. Like, it needs to prove that it's going to hold. And some people are going to say, well, no, it doesn't. It could just be like a spring right here off 393. Look, man, I get it. There's all kinds of crazy setups in the market, and if it makes a white coffee in bottom here, so be it. But typically we're looking for that quadruple flush, as I call it, like the 1, 2, 3, 4 motion that looks like a big zigzag. We do have a decent amount of volume right here, but my expectation for that zigzag would be that you would have a rise here that does indeed break out. I think it could go as high as that, maybe as like 480 even on a big breakout. Genuinely think it could go about that high. I think it could be a pretty big move. Part of that is because the trajectory here is very steep. So my initial expectation, like there's kind of a weaker trajectory there, and then there's a steeper one here. So my initial expectation would be that more than likely I would not expect there to be any kind of an advancement just yet until we find a support. This is good though. Like this is a good thing because a move up here to find support, again, could be as low as 403, could be around 415. Doesn't really make a huge difference as long as it finds support in this pocket. Then you can have that advancement go and break, and it would kind of be a trifecta of breaks, right? There's a lot going on. And I think you'd end up with a pretty steep move, maybe up to like the 470s or something. And then that to me would be normal, right? And then this is the part that's kind of interesting because this is the value from the spring in 2021 right here at 457. I'm not going to qualify that by talking about or like clarify that by talking about everything I've talked about yesterday. We're not doing that. But that is the value. So that 457 is that marked level. It'd be really interesting if it landed there and ended up taking off. I don't think that's way out there. If you look at this as an M cross, that actually kind of makes sense. But I don't necessarily think that it would break out without coming back down to like 444 first or 445. So there's kind of like a mixed reality here of like where would I normally expect it to go, and then could it actually interact much like it did in 2021? Perhaps. I mean, it could, So we get a pullback, we find support, we burst to the upside perhaps. Maybe we have a sharp pullback to 450 or something before the end of the day Friday. I don't know. If it ends up going up there and it holds above 450 going into Friday, I'd be relatively bullish about Monday. I do think Monday could then be quite explosive, being that next week is Christmas week. Even if you don't celebrate it, doesn't matter because the holiday will have the day off, so you won't be trading the stock market. Maybe you can trade crypto or something. So Monday, Tuesday are kind of your only days next week. I don't necessarily think that it has to run or anything like that or do much of anything on those 2 days. You never know. Sometimes a short week is pretty explosive early on, dies later out. Sometimes it's like the opposite. It's pretty dead early on, and then after the holiday, it's pretty explosive. My expectation would be that a lot of folks may not want to be trading, and we'll see. So I talked about it a little bit on the Discord. The original trajectories that I have for $6 actually are pretty early, and we're at the point now where I don't really necessarily think that they're going to hit. Because a lot of those trajectories were right around now, like the 18th. If you guys remember that, we had a lot of pivots like right on the 18th and 19th. But some of the main trajectories from this pool were actually around the 30th. And so I had originally talked about two different setups. One was, I say originally, but this was like a week ago. One was a setup that would go maybe starting around the 18th, which is kind of today, and head into like the 30th. And so you wouldn't get to wherever you're going, at least these initial targets, you wouldn't get there till either the 24th, which is like Christmas Eve, which seemed a little crazy to me, or December 30th, which makes a little more sense. There's a few more days in the month of December, and it makes more sense maybe to run after going into the new year if you're going to run at that time. And then the alternative was that earlier move to 6. I don't see that obviously happening because it's kind of come and gone. So some of the first trajectories that we got were kind of pinpointing $6 to $6.50 around now. I would suggest to you that it's kind of an inversion of that expectation, almost like it flipped. I don't want it to be like too dramatic, like, oh no, they changed their mind, they flipped a fractal or something. But that is kind of part of the nature sometimes of what we see. I don't think it's a valid excuse per se for like why it didn't happen. No, it didn't happen just because somebody flipped a switch. It usually is because there's some kind of a catalyst or something, right? And I think that's reasonable. Like if we look back and we say like, well, if it moved the same distance down from here as it moved up or whatever, up versus down, you probably argue that, yeah, it could have been about 6. We had talked about going from, just from a volume perspective, we had talked about going back to 460 maybe for that gap and then pushing up. That distance is right back up to 595 is pretty clean. So, I mean, I don't know. Maybe. I don't think that's a big deal, though. It's not really worth stressing about anyways. It's already happened, you know? Like, we can't do anything about that. But I would say that these original kind of pushes right here on these acceleration ramps, these are still pointing up towards $8 going into December 30th. So they're not completely gone. Well, what makes you think that they're going to hit, Booksy, versus the $6 ones that didn't hit? I'm shrugging my shoulders. I think there's a decent chance based on what we talked about yesterday. FOMC is live now, hawkish for 2025. 0.25 cut, 2 rate cuts down from 4 expected. I don't think that means a whole lot. I think it means maybe they're a little bit more. If it's down from 4 expected, then they're probably like easing off the brake. I mean, they're pumping the brakes, so that would just tell me that they don't think that it warrants rapid cuts. And they're probably concerned about the jobs market still. They've been talking about that for a while. So it really just depends on how you communicate it, I guess. Like what you think about one versus the other. So I wouldn't be overly concerned or something. All right. Yeah, and like I'd been looking at IWM. I don't particularly feel like I was wrong. I said that I thought it was going to come down from like 240 to maybe head towards 226. I think if it breaks down, it's going to slide real low to like 213. But if that happens, and it hasn't happened yet, but if it does happen and it can't hold right here, like around 228, I don't necessarily think that's a bad thing. I think that there's a good reason to come back. There's like multiple creek tests there. There's a lot going on in that little region down here. And there's like gaps that just were left open. So, yeah, I mean, it kind of slows it's kind of slowing the idea that small caps, again, aren't going to recover as fast because of the lack of rate cuts, I guess. It's slowing the train. I'm trying to think of a better way to put it, but yeah, but I mean, from a technical perspective, this is not unusual. Like, again, if you had looked at me and said, and I didn't know rate cuts were going on, I wouldn't have thought any different than what I've already said. So if that ends up, causing a greater sell down or something because people are worried that for small caps or something like that, so be it. But it's not, in my opinion, it's not really over anyways until maybe a week or two after FOMC, because that initial move can be kind of misleading. So if we're trading on volatility here, that's different. You'd be getting in and out of trades based on what the guy is saying right now. But if we're just looking at the overall setup, I don't think it was unusual that this came down as low as it did already. And I don't think it would be that unusual if it went even lower. I'd prefer if it stayed right here between 225 and 228. But that's like a preference. That's not like the end all be all. So for me, like I had talked about it earlier in the week, maybe even last week, because I think we were talking about it coming up, I was already of the impression that we were going to come down further. This is a big bearish divergence right here on the daily. That's not something to be ignored, And then there's a huge amount of selling pressure that's coming in through this top. These swings are getting really wild. And high volatility like that in a top is usually an indication of some kind of distribution. It doesn't have to mean it's like market-wide distribution, like it's going to continue and then start marking down. But it obviously could be. So you take into consideration that. So I don't feel like that was unusual at all. Things can change, pretty quick, quarter to quarter. So we'll see. That might be the case now, and then they may decide to go back on that. So they're trying to bring it down. But I think the market already knew this was happening. They had already set up, to some degree, had already set up for some downside here on the small caps. I don't necessarily think it breaks completely through, but if it does, it's got a good place to stop near that gap around 212. And I don't think it's unhealthy. If you look back on that level historically, like that's a good place to come back if you need to, and find your footing. I'm actually kind of looking forward to it as well, because I don't have any money on this play right now personally. So for me, I'm kind of waiting to see if there's a good simple entry here, and I think it's coming up. I still think that small caps are missing their big rally, and I think that historically speaking, like where we are currently, we're low, but we're coming back down into the lower portion of where these supply zones were. And the lowest supply that we have back here, again, maybe you could say it was like 226, and that's kind of where we landed here on these tops. It would make sense to kind of come and get a double bottom or something. So I'm not really concerned about that. I'd be more concerned, I suppose, about what that might do for something like AMC, which has already had its own kind of blows to its momentum, but we'll see. Again, it's just one day. I'm streaming it because I know it's important and there could be some volatility. I wouldn't have streamed today at all if FOMC wasn't going on, because I didn't think it was very likely we were just going to break out. I would have been surprised if we did that without a backup here. So it just felt like a nothing day to me. Like, okay, we're going to push up and then probably remove it all. And we'll see. So sometimes the best thing you can do is do nothing, It's FOMC meeting, so I decided I would stream. I'm not streaming the meeting. I don't really want to. And my computer's kind of been acting funny lately, so like getting old, real old. But it's probably time to upgrade, but I'll do it when I can afford to upgrade. So anywho, if this were to advance, it isn't that far away. It needs to just kind of build a support here and then push off. And honestly, I think that if it builds a support here and pushes off, at the very least, you would have to say that you think it's coming up to check this higher like creek test up here, like this little pocket at like 460. Even if you didn't like 100% believe it was going to run or something, you just thought, oh, it's just going to come up and die again. It would be pretty easy to see why it would come back up to just above 460 if it manages to push up again. So we're gonna keep an eye on it and see what happens. So GME today, same deal. Like I don't know, when it came up again, what I noticed first and foremost was where that wick was. I mean, it's right where you would expect it to be if it did come up again. I have two different charts here. They're kind of similar in some ways. They're kind of different in other ways, but they're pretty much the exact same when it comes to these parallels. And both different time frames. One is like weekly over here, and this is like the 30-minute. That weekly looks like an engulfing candle right now. If it can hold, it just ate up all that, downside, which is nice. It's kind of weak on volume. That's a little bit of a problem. But I have to say, like on the short term, when this is a 30-minute chart, while I don't think it looks like horrible, it definitely has a vibe that could turn into something pretty nasty if it doesn't hold. Because like right now, it did come back and make a hold on 30, which is great. That was kind of the level I thought it would do, but remember when it went up really abruptly, and it did not check this creek jump, which is a pretty major oversight. Like there's a huge amount of gap space right here. I'm obsessed with that kind of stuff, I know. But turns out it's a good thing usually to be obsessed about, because if this fails, and it could, it may not, but if it does fail, there's a little trend right here. It's pretty likely if it fails and it can't make the next jump up here. So there's a little double M shape right in the middle, and there should be like a larger an attempt to push. If it can't make that and it ends up going through instead of finding support, and it's an if statement, this is where it would be decided, right? If it does that, then you'd have a problem of like probably you're going to come all the way down. Like really far. Like you're probably going to come down to like 2870. Is that a huge issue? Well, maybe not, but it's a bit disconcerting, because when right before we took off, we made a little push down through the uptrend here, and that bothers me, because that kind of stuff typically I read it as like, oh, so that uptrend didn't hold and then they recaptured it and ran. But if you come back to check that uptrend again, you definitely run the risk of like just kind of bleeding through it, because you would look at that and say it was an attempt to go down. They found that there was liquidity, but they decided to take it up first to the top of the range, right, and then to sell it back. That's exactly what happens in distribution. So if you do get to this plot where it comes back down to 2885, it's kind of on the wire. Then you have to be really cautious. If something like this were to occur, it would be not good, like big picture wise. So I'm going to be like careful, because this is hypothetical. This hasn't happened. But if this makes a move down through this trend right now, if it does not find its footing and instead races up and then dumps again, I think we'll be in kind of a bad spot for GME. And one thing I noticed was I had timed out those rotations. And what I noticed was that the rotations were timed out according to this blue line, but the moves were happening like they were right here. They were happening like according to they're not moving up to the blue line is what I'm trying to say. So like the principal idea there was that these checks would be relatively quick, 1, 2, and then up to the next 1, 3, 4 up at the top here, where it pushes up to the blue line. Instead, we're still getting like stuck underneath this orange trend, which is different. I mean, it's just not the same. So it's less steep, right? So what's odd is it seems like there's kind of a rotation going on, but it's a lot flatter. So it ended up almost perfectly hitting multiple times now. Like remember we were over here, we were barely off. We were off by like a few hours. It ended up being like a trading session because of the day change from Wednesday to Thursday, but it wasn't that far off. Like, so we've so far hit these rotations pretty close. This is the same deal. It was like slightly early, but it wasn't like way off. When we did these measurements from the rotation values, it's pretty close. The problem is it's not going up high enough. So like, that is a problem, because now you're waiting to see if it's even going to jump that creek. This parallel has so far all we've done is double topped on it. So what, is it over? No, it's not, but it's kind of like AMC. Like it doesn't really look like it's in a position necessarily this morning, right? When we're talking about today, trading today, it didn't really look like it was in a position to just start running. It needs to kind of back up and find that there is indeed support here. And I would say that GME is much the same in that regard. Like, it may not need to go all the way back down to 28, but if it did, I'd be like, okay, so what? I mean, we didn't check it. I'd rather find support now and then like break out and go than try to take off to the upside and have to flush back through to get it. And that's the kind of stuff that sets up distribution. I say it causes distribution, really just a setup for it, right? Now, on the other hand, you might look at it and say, look, man, I get where you're coming from, but if this creates one of those like J shapes, who cares? It's going to go up, break out. Yeah, and I'm with you on that. We don't know the future. We're just reading a chart. So like, there's no reason to look at this with suspicion unless it just can't do what it needs to do. But I think that you're wise to be a little bit skeptical You guys are like, well, don't be suspicious, but be suspicious. You know what I mean? Be alert. Like, be prepared. I think that's different than being like overly skeptical of every move. You know, this move itself, there's nothing wrong with that. It's just a nice creek jump. I don't think there's anything particularly wrong with it. You know, but I have to kind of then see what happens with it. You know, I have to be aware of what's going on. We haven't yet pushed above highs. We are above this kind of breakdown level that we had back at like 3150 on November 27th. We're above that, but I'm like at that right now, but it didn't come above the buying climax at 32. And it makes sense. There's this kind of wall here. And I've been talking about these parallels pretty religiously lately on GME. I still believe that they're correct, and I think that when we hit them, you can see why I think they're correct. I haven't moved it or anything. You know, it's still in the same spot, and it's like this is another one right here. So for us to like look at it and see that this actually backed up all the way to it and went really low after it jumped. So I don't know, man. Like, it's totally possible it could come back down to 2870s or something like that if it needs to. I don't know. We'll see. What is the expectation of... Let me ask you guys this. If we're trading... just a general question because I'm just curious. If we're trading on an FOMC day, like, what is your expectation for like watching a stream? Because I see a lot of people that stream like live trading. I'm going to trade SPY on FOMC, or I'm going to do this or that. And those kind of trading events are cool, but they're specifically kind of risk on, designed for people who just want to trade it. When I come on and do FOMC, I'm kind of just waiting for the news. I don't particularly think that watching Powell is very exciting. We used to do it all the time, and then I've kind of grown away from it because he says the same thing every time. Like, you know, like, and my interpretation of it is almost always exactly like straight on. Like, here's what I think he's saying. It's pretty basic. But I just kind of wonder because, you know, if you come on and you're just looking for like a lot of excitement or whatever, it could happen. But I'm not really sure where that expectation maybe would come from. So I'm just curious. Well, how about I start with... You guys are like, what are you talking about? Like, if the expectation is that I'm just going to stream Powell, then it doesn't really make sense because, like, you can go watch him if you want to go watch him. If the expectation is we're going to trade live, it's not something I really do very much at all. And if I did do it, it would be very particular, like, stock moments and breakout moments and stuff. I'm just kind of giving an overview because I think that it's important to kind of just look at the big picture and just understand, like, we're already kind of in a setup. We're already in a technical setup that kind of presented itself a certain way. And if FOMC changes that, that could be a big deal. If there's some kind of huge news. But otherwise, like, for the most part, it should just be like a regular stream with a little added intrigue. Intrigue. That's the word. You guys are like, well, we're not running 400%, so I think I'm done. Yeah. Yeah, I've been watching MPW pretty religiously, as you guys know. I talk about this stock every now and then. I feel like this stock is kind of mimicking what AMC is doing. And I find that to be very curious. And the more I kind of study it, the more I feel like that's true. One of the things that's really bugged me about the two of them is that when we had that September 13th moment and AMC did not run up, I kind of just put it in my head that it wasn't necessarily gonna have that phase B, or it was going down for a spring and it might have the phase B later or something like that, like a bottom. You know what I mean? I don't know that wouldn't even make sense. But like MPW did, and then it broke down and it looked like it was going to do what AMC did in 2020 to 2021. But interestingly, the timing here is very precisely similar to what we saw in 2020. But then it made some like really bizarre changes to this structure. So I looked at it like it was a head and shoulder, maybe rightfully so. And it times out pretty well as a head and shoulder for some of these early hits. Like the first 3 hits on this $5 level are the same. But then when it came to this push up to 530, it's not happening. Instead, it's bound to this quite large channel, which just so happens to be the creek. And I'm like, well, this is interesting. It does seem like a little bit of a slingshot moment because you're pushing away from this uptrend. You've clearly like made an effort to come below. There's 3 up thrusts, right, that are occurring right along this uptrend. It would seem evident to me that there's like a pretty massive RSI divergence. It's still there right here on this bottom from October 14th all the way through December. That's a long-term divergence. Like, that's a long time. 2 months is a long time for a divergence like that. What makes it even crazier is there's actually a bigger divergence now because technically this made a lower low than the October one, right? And did it on RSI back in this time period way back in July. So now this is presenting itself like this huge divergence because you have a lower low that's been made here and it's clearly still holding the advantage of a higher RSI. This is a 4-hour chart. This thing looks like it's getting ready to like explode. And I'm looking at this like, I don't quite get it. You know, on the one hand, if it were like AMC back in 2020, we would have expected that during that breakdown here in October, going into like November, for example, that you would have come down lower, then pushed up. This might have made more sense. You know, it looks a lot like that head and shoulder, but this would have been like more sensible to me, and then drop down low, maybe back to the 3s or something. It's a lot like what we saw with AMC. It didn't quite follow that path, and yet it kind of did, you know. Weirdly, though, it hasn't followed any kind of major, in my opinion, there's no real major push-up at all to go retest. It's just kind of pressing. I hate to use the term powder keg because it makes it sound like it's definitely going to be some explosive move. But there is a lot of reason why you would come back to 527. And right now I'm like, it seems like if it managed to get above, oddly, 415, which is like the same level that we talked about with AMC, you'd have a pretty good chance it's going to race at least $1 back up to 5s. They left a gap way up here at 624 as well. If it's like what we saw in 2021, then the expectation would be that during the month of December, it could still have some downside. I mean, technically, you know, AMC was having downside in 2020 almost all the way through December into January, early January, right? It doesn't take a bottom, I think, until like the 6th or something of January. And then it doesn't break out until after probably what it was futures expirations or something, but they had the 15th or something, middle of the month. You also have monthly options contracts, and that's really where AMC finally took off. So if I were looking at that, I might say like that would have been an expectation, but it's just very strange the way it's setting up, where, remember, like AMC, we were taking that into consideration that maybe this is like super bullish because it does have, just like it did in 2021, it does have a pretty major bullish divergence. It has to hold it. That can't be lost, but it's there. And then the on-balance volume looks essentially identical to that same time period around elections in 2020. I went back and I checked yesterday And I had to do a couple different things because I was like, I've been using this wave, but there are other ways to measure this move. And one of the ways that's pretty interesting is the V shape in and out here. And when you use that in 2020 on AMC, and I'm not going to like go through everything we went through yesterday, don't worry. But I want to bring this to your attention because if this hadn't measured outright, I would have been like, not happening, or the window's already gone. What I did is I took the same ideas that I had before. So the idea I had before was that there's two things, well, there's like two or three things going on, but like there's two main things. One, that this is all part of like one wave, right? And so if you look at it like a wave, this is like whipping around that wave and eventually it comes back up and it breaks out. And then weirdly, there's like a perfect 2-year cycle here. It comes back to the same exact price, almost exactly 2 years later. And that's important, right? That there's a kind of a mathematical design to it. Well, I looked at the RSI and I'm like, it looks pretty similar. It's not exactly the same, but it looks pretty similar. The thing is that what I had done is I had been using this as a measurement and then measuring backwards. So what I had been doing is I had taken that idea and said, well, I think it's going to be like exactly the same, right? And so I took it and I went back and I said, oh, I think it's going to be exactly the same. And I would move this over here and I'd be like, so it doesn't leave until 2000 and, summer 2025 or whatever. And then what you would do is you take the inner portion of this and you say, well, maybe this is a way to kind of truncate that measurement because it actually reaches the same point at the same time here. I don't know if it just didn't occur to me, but sometimes you just do things and then you kind of get stuck in that way of doing things and you're like, oh, well, it should just be like this or whatever. But I had just kind of been stuck in that way of doing things. So I'd been taking that measurement and then using like a smaller one and making what I would call an assumption, right? That, okay, well, it doesn't get out of 14 until late summer, but it really gets there around June. Like there's a June run up, so on and so forth. And then later I made a case that, well, technically this is a little bit messed up because of certain things on what's going on here versus what's going on here in terms of those levels. So what I decided to do was do a different measurement. So I took a box. That's all this is. If you want to define it differently, you can, but it's basically like a box. And arguably, you could probably say it's a GAN box. If we could do a GAN box with this, because what it's doing is it's dividing it into quarters in order to develop 4 triangular parts in order to develop a thesis. And normally if I use the GAN box, I put those trajectories on and they would be doing the same thing. They would be like splitting these up into 45-degree angles or whatever. So when I did that, I was like, all right, it actually works really well if you measure from top here, and there is a trajectory, thankfully, that's really obvious right through here with the price action that actually points to where the bottom is going to be. And all I did was I took it and just kind of mirrored it, and it matches. It matches where it actually hits the exit point. Simple enough. So what are you trying to say? Well, I guess what I'm trying to say is that if I thought that this was a wave that ultimately has this kind of entry and exit model to it, if I'm using it as a means of understanding timing, I may be able to do something similar by using, again, timing of like the hits on the extremes of the range. And I kind of was doing that and I kind of wasn't. So like what would bothered me maybe about that, what I just said, is that I've been using this as like a bracket in the middle. So this is the center as opposed to like the bottom. But if you just take the time it took to get from top to bottom, back to top again, it's equal. Like it's an equal segment of time. It's really basic. So instead of me using like I would call it maybe like it's not arbitrary, but it's like a secondary almost entry and exit point over here as the measure. Instead, just look at where it broke down and there's a gap. and this is important. So there's a gap right here. So this is like an LSPY kind of deal. Like it's just a bear flag, right? Before you take down, right? Go to the downside. And right at the end of this bear flag, right before it drops, there's a gap right up here at 74 or 79.41. Okay, that's the gap that I decided I would look at, because I'm like, there's gaps on AMC too. We did it yesterday. There's a lot of gaps and stuff. That's exactly where you find that center point. It's like right here. I'm pointing to it with my finger so you can see it. My little mouse finger thing. And when you look at the middle of that whole rotation, how could they have possibly known? That was I don't know. I don't care. I don't know, and I don't care. That's the bottom. All right, so what the measurement then would include would be from the last point of supply right here before it dropped all the way down to the bottom would give you a 50-50 turn, like a halfway point basically for that move coming back up. If you had looked at this, listen, and I got to be brutally honest here. If I had looked at that and that was what someone was saying to me personally back here in January, I don't think I would have believed them. I think I would have had a really hard time believing that this could possibly go from down bottom here all the way up to, like, that's a big move, right? And you're basically saying that you think just because it hit a low from where it entered this gap zone or whatever, you think it's going to come back and hit that. Well, that was before I started messing with like wave stuff. Nowadays, I probably would be like, maybe, because that kind of stuff happens with slingshots, especially if the range itself is bullish, which the 2020 range is. You can see those kind of massive reactions. It's just not normally what you'd expect. And I definitely wouldn't have looked at that back then and been like, from a technical standpoint, and been like, yeah, that makes sense. That would have sounded like somebody just pumping hopium to me. So I'm trying to keep that in mind, because I totally understand if someone looks at this and they think this is bogus hopium or something like that. But this is kind of my last, I don't think there's going to be any other time. So between now and like January 15th or whatever it is, there's not really going to be any other time. Like I'm going to be doing holiday stuff for a week or so. Like I'm not going to be back until January pretty much. This is it. Like I've got a few more days here and then I'm pretty much done. Like I will not be streaming much at all after. So who knows? Like a ton of stuff could happen. I am feeling a little bit like cram session right now, because I'm like, well, lots of stuff could happen between now and then, and I won't be able to tell you about it, or at least talk to you about it. Maybe you don't need it, but at the same time, like, I've got the opportunity now. I'm going to try my best to like finish this thought. And I went through yesterday and I looked at the same thing. So first of all, is the timing the same? Well, the answer would be no. So this is one thing that's very important, because when I had done that curve, for the most part, I think I was assuming that the timing would be this kind of like 2-year cycle. And it seemed likely because it kind of matches. It's not perfect, but it like kind of matches, what we're seeing here on the price action. The issue with that is then you have to make an assumption that this is a middle point, right, of the structure. And therefore, you're kind of running on the assumption that somehow like this is the middle. But I already knew like the middle was basically right here in August or something. But I already knew that wasn't quite right. What do you mean, Booksy? You lying to us? I've not been lying. I've just been like kind of quietly like being like, well, maybe I just don't know what the end is yet. I don't have a good way of measuring it beyond what I've already done, which is triangulation. And the curve itself, again, it looks kind of right. So maybe it's right. But here's the truth. It's not in the right spot. The center here is closer to, it's quite off. Like if I were to compare the two centers, you would see a pretty substantial difference. Like the centers are months apart. Like if I were to compare this to the same spot in terms of like movement, I would have to say that September of 2020 is very similar to September of 2024. But the problem is that we didn't enter this structure, you know, in that time period. We didn't drop from that gap in May. We dropped from that gap in August. Well, why does that matter? Because it's not the same timing. So like, even if you thought that from like a fractal standpoint, right? Even if you thought like this is the middle, which it's not, but even if you thought like this is the middle, you would put that like right here in August. But the problem is that measurement from this middle to the beginning and this middle to the beginning could not possibly be the same. Like it doesn't work. The timing's not the same. So there's a little bit of a disconnect in me even just sitting here saying like it's the same thing. It's not really. So instead what I did is I went and when I found the second option here, which was, well, let's just look at where it enters, where it hits the bottom, and where it exits. It is mathematically the same time period. So that's a pretty important detail. It's not like, even if it were like an hour or two off, I'd be like, oh, it's the same. This isn't even like a day or two off. Like it's right there, right? It's not weeks off. It's right there, you know? So I'm like, okay, so where did that really happen for us? Well, the answer is that this motion right here is where that happened, but it was before, and this is important because it was before our split. And so one of the things that immediately kind of came to my mind was that like, well, does that mean you're going to go to 45? And I'm like, no, because in my mind, no, because again, there's been a shift. Do I think the shift warrants 45? No, we've already talked about that. When you look at the shift by itself, it actually makes perfect sense that it would go to 45 because that would be the time that you would come back and like fill that gap. Like right here, if you pushed up, we talked about this yesterday. If you pushed up from, this is hypothetical because it's not actually 955 if you don't have the shift, but you get what I'm saying. You push up from 955 up to 45, that distance traveled is comparable to us going up to like 20 right now, right? And we talked about that at length in the stream yesterday. So I'm not going to go through that again. But I'm like, I'm going to believe that the shift is the shift and that they did indeed shift everything down because I think they did. Therefore, you have to shift the targets down, and I think I will. And I'm not going to say that you're going to go to 45 in one big move because I don't think that's going to happen. But I do think that with the shift as it is, it could lend you to get to like the 20s, right? Well, this is kind of where things get a bit interesting because you guys are like, oh, they're pretty interesting, Booksy. Yeah, I know. It is interesting, but it's a little different too. That means at the beginning of this structure, all right, if you not thinking about time, or not thinking about the shift, but just thinking about time, just think about time. The timing of the beginning of this structure was like August 11th. If the middle from August 11th is indeed where the bottom is, which is the case, is what it was back in 2000, and you guys are like, yeah, but it made a lower low. Don't care. It's the first bottom before the big reaction up, first bottom before the big reaction up. If the bottom is in April on the 16th, that means that the end of this structure, believe it or not, the end of this structure is actually, and you guys are going to be like, what? Is June 10th. I'm not sitting here like trying to make a stronger and stronger case for January. I just needed to check. And I wanted to see if that made any sense. This idea of this gap relating to this gap here at 20, like does the shift value really make sense? Is there another way to maybe do the measurement? I even went a little further and said, okay, well, let's just assume that that's not true for a second. Let's just assume that they actually reset it and that the gap at 13 is the gap that they really want to use. It's not the gap, that basically like when you hit this time period down to this time period, you're going to see that reversal. Well, immediately I'm like, that's wrong. Weirdly, the way it measured out, if you take it to like the gap or whatever, is it measures out to this little spike right here that we had. Some of you guys are like, well, that's it. The move's over. Booksy said it. But again, like that's not quite right because it doesn't really work. And you guys are like, well, then it just means it didn't happen. Well, that's not exactly true either because I'm just adding this one as if it's a possibility. So it's like a window, right? So then what I did is I took an alternative path and looked at middles, and it looks a little messy on the top. It doesn't make any sense right now. It looks like I'm just shifting this over, like it's the same time period but shifted over. And it does actually give a pretty good estimation of where this bottom is, which is right around earnings on the 7th. If you shift it over that distance that we talk about right here from August 11th till roughly September 5th, if you shift it over, that's about the same time period that it took from our bottom really close to earnings, which I thought was kind of interesting. So I was like, well, maybe that's a possibility as well, you know. So there's like kind of multiple possibilities here within this one possibility. And I know that that kind of makes it frustrating perhaps to some degree because you're like, well, which is it? What are you going to use? I'll say this, you know, the latest here would be like January 30th. That would be more similar to like maybe what happened in 2021. All right, that would be the latest. I don't think I could make a case beyond that. Like, I think I'd have trouble arguing that this was somehow the middle and not either of these 2 points. And then beyond that, like, there's not really much of a window here. It runs from December 17th, weirdly. I know, because you're like, well, that's when you did this, right? Yeah, that's weird. Don't hear me wrong. Okay, I don't think that's normal. But it runs from December 17th back to that August 11th date. And then the middle would be the bottom here in April. All right. Well, I don't know if I understand what you're saying, Booksy, but it kind of sounds like you think that it should already be running up, in which case maybe we did miss it. But then here's the kicker, right? If you look at the RSI, it is not by any means like dysfunctional. Like it looks the same. And what's unique about it is that I could be a little bit off, right, on this timing, but if you look at like a patterning, it's not as hard to understand. So what I mean to say is that like RSI gives you kind of another glimpse at the same information. So this is where the breakdown broke down. This is where the breakdown happened right here. I'm drawing on the screen in May of 2019. That's where that gap occurs. This is where there was like a buildup and then it just dumps, okay? And from that point forward, it's no longer in that upper range, which you would call like a last point of supply on the big picture. It starts working its way down. It's a markdown period, okay? The same thing applies to us on August 11th. It is indeed kind of like in the middle. Weirdly, like both of these have a gap that appears on those dates, but the RSI is like crossing through like the center mark, almost like an anchor, right? The RSI is already kind of like dumping. So RSI is like right around 50 and almost the same here. It's like kind of just below it. It's like right there. Really bizarre, okay? So even though there's a gap and you're starting a sell down, you actually already have like sold the RSI down quite far. And then what's really, I think, interesting is the rest of this actually looks pretty much like you would expect like an S-curve to look like an M shape. There's always an M shape in the middle of an S-curve, right? S-curve comes down, creates ledge 1, ledge 2, then it hits a bottom. So you'd expect to see that in RSI, and we do. There's a pretty clear and distinct like reactive move. There's even like a little M here, and then there's like a big M, like the middle of the two, right? And this ends up signifying where the bottom is. So this structure, as it were, is all part of like that walk down that's occurring going into the big COVID drop. And we've probably addressed this before, but like that is really unusual because it's like already in a downward motion. And you guys are like, well, it doesn't matter. There's probably a lot of stocks that were already in a downward motion. And I'd say, yeah, you're probably right. Though it's not as nice, like it doesn't have as neat of a, maybe that middle especially. You can kind of see it's like sloppy little middle M right here. It's there. It's just really messy. It's like right here. It's there. It's a pretty similar build out between, again, the top and where that bottom is. Pretty similar. And then, much to some folks' dismay, perhaps, they would look at this and say, well, it's not the same anymore, right? Like, it can't be the same anymore. This is where things get kind of theoretical, and I don't want to get like too deep into it. But I think I've talked about before that this is really the move, and then this is like a reactive move that comes up and it hits higher. And if you look at that as a waveform, this trend had already broken down, right? Like it had already lost the trend. So this is like a whole secondary action that happens. You could think about this as all one move, or an alternative would be to kind of think about it as like, this is like a hook, right? And that hook is like rejecting the reclaiming of that other trend to the upside, that other trajectory to the upside. Either way is fine. It just depends on how you want to define it. The reason I'm talking about that is because this, which I consider to be like a phase B top, does not seem to happen, right, at all on AMC. It doesn't seem to exist. But in reality, if you look closely at what this is in terms of the structure, what's happening here is that this is essentially just a breakdown, right, that kind of lands essentially like right in the middle of these two time periods. So I'm not going to split it up multiple times, but it is a hook and a breakdown. So it's like that's the second cat ear, drives the price back down to lows. No one would disagree with that. The same thing applies here. Like this is the second cat ear. There's a gully between the two. You know, I don't want to overdraw this. It's already drawn on here, basically, because this one's really obvious. But this one was the one that we had the most trouble with, and it was not easy at first, but that's the gully between the two. And it is a breakdown that occurs roughly halfway between, you know, these two extreme ends. It's in the right place. You may not think it's the same, like, and it's not in terms of like what it accomplished, perhaps. It's not the same thing. But otherwise, it's pretty much the same. And I already talked about it yesterday, but this walkthrough is very similar. Like there's a 50-50 drop, and then it comes back up to that curve, you know, and after that point, it then pushes down low. And when that happens, this is when you get a divergence on RSI leading into the big breakout moment, which is timed right after that, like really, really close after that, like within a 20-day window. So I went back and I was just like, all right, let's say that we thought it was somewhere in this window, because I'm giving myself a little bit of leeway here. What would need to happen, right? This would have to be divergent. That's a given. You'd kind of have to have the same cross and breakdown. And we've talked about this. I think we do. You know, it's not as, definitely not as big. So that's an argument. You say, well, it's not nearly as the same size. No, it's not, but it's there. And then in a very similar time frame, I might add, again, I'm breaking this into parts on its own proportion, but again, I'm dividing it in half, and then I'm looking at where that is. And in relationship to like where it should be, it's the right spot, and it just has to be divergent. So in 2020, going into 2021, what first happens, at least on the daily RSIs, January 11th through like the 14th, the RSI crossed over. Going backwards and looking at that, it doesn't really make a huge amount of sense that that was where the floor was, because at least for me, if I had been looking at it back then, I probably wouldn't have said that was the floor, but it is the place that you did take off from, you know, in April of 2020, and it is where you bounced after the gap. But other than that, I don't know, man. Would I have identified that as the floor? Probably not. What I think from the phase B point of view, yeah, you would say, oh, it needs to get back above this little marker right here. But looking backwards, it's kind of like this didn't respect it. You probably would have said the floor was down here, and you wouldn't have been wrong either, because it does go beneath that floor just slightly during the spring. So it's like either way, you could have been pretty accurate. But like where does it hold, right? Well, we've done this kind of shift value stuff back and forth, and I'm like, okay, So this obviously is like theory, you know. There is a huge similarity in on-balance volume in the times. We talked about that as well. Like the on-balance volume hikes up really high during this time period. It's higher than it is back here, you know, even though it's lower. That's the same thing that's happening right now. And then when it drops, the last time it drops, there's a big sell-off and it actually goes low again. It like drops the OBV quite a bit before the big run up. It looks like the stock is kind of dunsy, you know, it's like done for. It really does. When that drop starts happening, it looks really bad. The same thing is happening right now. Like this area has a much higher on-balance volume than the September 13th region, much higher. It just kept climbing during this whole time period, even though we had this deep retracement down to the fours, even though we had this deep dive down to the fours, we're still gaining in on-balance volume. Then this has a steep sell-off and there's a heavy drop in on-balance volume right here. Again, it looks kind of bearish. It does, right? We're talking about that the other day. Like it still looks bad, but like it's weirdly the same, okay? When I went and looked at the quote unquote fractal comparison between these periods, you know that it would be the same. Like it would be pretty similar, and it is. Timing wise, it's pretty darn similar. The only thing that's really different is this. There's no like major move up. If this had moved to like 8 something to major move down, but otherwise like it's essentially identical. Like if you look at the volatility of that, it can kind of mislead you to say like, oh, it's not the same at all. No, it's still doing the same thing, especially with RSI on the daily, it's doing the same thing. So if we were to blame anything, we couldn't really look at this and say that for some reason like the market conditions are they're doing something completely different, when you can see pretty clearly, aside from this up thrust missing, it's really doing the same thing. And honestly, RSI, even from the bottom up, looks pretty much the same. So when I look at this, I'm like, look, there's obviously like a disconnect, a little bit of a disconnect in some ways, because we can't, you can say apple and oranges are both fruit, but you can't ultimately like make them the same if they're not the same. These are, in my opinion, really close to the same thing. I don't necessarily think that that implication would say that that means it has to run, but it is indeed very compelling. It is. And what I would expect is that this criteria would be met. The criteria that the RSI here would need to find some kind of a support above the moving average RSI, just like it did in 2020. And that's a good, pretty easy way to understand maybe what could happen. If it comes up here and rejects, I mean, it's not really working out, is it? You know, that's pretty straightforward. I'm not sure where that happens, but when you take the overall chart into that consideration of the time frame, given that this is more compressed, the expectation would be that like this would happen really soon, like maybe going into Christmas, and that after Christmas it would potentially be on the rise. This falls into line with what we see on trajectories, because trajectories still have, like recent trajectories, okay, still have a potential move up to the 8s by December. That would be like a halfway point for the bigger move if it were to continue. So it's kind of strange. It's like, it doesn't seem like there's enough time to accomplish it, and I don't want to jump the gun and be like, it's going to happen, and then, you know, everybody's all disappointed. But at the same time, there's plenty of time. Like, it's actually got enough room. Most of the time when AMC starts a final accumulation, it's like 9 to 12 days before it runs. It does not take much longer. If this were a final accumulation, we would know really quick, you know. So for me, I'm like, well, that doesn't give you much time. It's basically like now until the 30th. That's 12 or 14 days. So maybe now until the Friday before then, you know, the 27th. So the expectation would be that during this holiday, if it's going to run, it's a big if, it sets up and builds out. And where does it need to find support? Well, that's the question. That's the $1 million question, I guess. technically, again, spring value from 2021 is around 460. So like, I don't think it's unreasonable to suggest, based on the fact that the PNF for this chart had the most frequent hits at 460, I don't think it's unreasonable to suggest that 460 would be a really good indication of a potential run. It kind of makes sense to me. But if I'm just looking at like a direct comparison, I would say that ultimately it could just be like a build out above 404. Because like if you're looking at it like it's similar to 2020 and you thought it had to be the same, you would just say it's the bottom it hit back here, which was like 402 or 403. So do I think that this is going to happen? I got to be honest. I think it would be a really smart way to, like, the way they've disguised this move would be really, really smart. Because at least for now, it doesn't look good. Like, it looks really bearish, you know? And it seems to me that if you were going to do the same thing and have this, like, big squeeze moment, and you probably wouldn't broadcast it and make it really obvious. And it probably would look kind of bad. And I bet in 2000 and... I'm betting that in 2020, again, going into 2021, a lot of people felt the same way. Like, this is never going to happen, you know? And look, the good news is if it doesn't happen, you're not going like really, really far. So the good news is, hey, if it doesn't work out and we start dropping or something, all right, maybe it's easier to believe you lose 50% of your value. That's not great, but at least it's there. Like, it's not a huge number as opposed to like gaining hundreds and hundreds of percent, right? Someone pointed out in the Discord group. I'm of the opinion that it's not good that I got to this last minute. I feel like inadequate in that way. Like I did not get there quick enough or something to like tell enough people that this is even a possibility. But then again, like, would that be even healthy? Would I want people to be like, you know, I don't know. Maybe it's not good. It's probably for the best, that kind of thing, right? Then there's only a handful of people that get screwed over if it doesn't go that way, you know? But I'm of the opinion that, like, it would have been nice to gotten there earlier, and it would have been nice to have had more time to really develop these ideas and think about it more critically, because I don't have a lot of time. And it feels like I'm throwing something in. And if I feel that way, that a lot of people out there probably feel that way. They probably feel like I'm like scrambling, grasping at straws. I genuinely think that it's the shift chart though. If I had made that shift chart, I don't think I would have come to this conclusion. And I just made it where I made it because of that document that I read. I mean, it is what it is. That's how I came to it, you know. If I had come to it like months and months sooner, I think it could have been a different story. You know, if we were talking about this and our expectations had been that it would be terminating like sometime in December going into January, which I had kind of outright said I did not think was going to happen multiple times, then we probably wouldn't be sitting here worried as much or thinking that it's some last minute shoe-in for the bulls, you know. And it's frustrating because if I'm wrong, then it really does seem like I was just scrambling and I'm like a chicken with his head cut off running around trying to make sense of something that doesn't make sense. That's not how I feel, but I could totally see why it would come off that way going into like a holiday season. And Booksy suddenly, he was bearish one day and then like the next day he's talking about all this weird stuff with like shift charts, and now he's like thinking that it actually could run, and where did this even come from? He's just pulling stuff out of thin air. I get it. And self-awareness does not discount that if it's a fallacy, right? If it's a bad thing, then self-awareness doesn't matter, right? It's just part of that story. You know, you can say like, well, he was aware of it, but that still means that you still made that mistake of falling into that, like, lulled into that expectation that something could happen. So right now we don't have 415, we've got 414, but as we said, like 415 would be a good place if we want to stop. That'd be a pretty good place to stop. I think it's a respectable zone. You know, we've talked about 417 a lot. I kind of don't even have 415 on this chart. It's really a little zone between maybe 414 and 417 because the hits there are not consistent. There's a lot at 417. There's a lot at 415. And then even lower, it looks like 414 has 1, 2, maybe 3. And then 412 has quite a bit as well. So it's got like 5. So it's kind of whatever. I think it's just a heavily checked area. But I would just say like that is the likely floor. And then if you don't hold that, I would be looking for 403 just on the basis of like, all right, well, we dip below it. Are we going to hold it if we go back down? That kind of thing. Yeah, in terms of waveforms here, and I did talk about this a little bit. This technically broke down and did check that waveform right here, but it's not come back up. If you were triangulating that, you'd say that ship already sailed because it was over here on December 16th. Looks more like a pivot than it does an actual bottom or an actual rise, but that does exist. Their gap there with that that trend tend to be respected, you know, and if they're not respected, then the one right below it maybe, which is just another parallel, tends to be respected. So if we were to come back up on this imbalance and even just go to fill that gap at 520, assuming that your operator even wanted to, if you did do that, it's likely that you'd go farther at this point, like at least up to 530 if it just took off straight up. That's where it is at the crow flies. They left it alone, I guess is what I'm trying to say. Like, and I don't know why. Maybe again, this could be like an inverted signpost, you know? Like we talk about signposts for ourselves when we're going up. This could be one for going down that it will later hit, but it won't hit anytime soon. Yeah, if this continues to accelerate, so there's another thing we could talk about. Yeah, there's not really much else to say about that. GME's dropped 4%. It looks like it's making its way back down. Should be broken down now. Yeah, below 29.89. That's, again, not entirely unexpected after making a double top. There's nothing here technically surprising. So if you're like worried because the market's flushing or whatever, this looks right. Like we were talking about this earlier, it looks correct. There's a failed advancement here, and I said if it came down below that line around 30.70, it's probably going to go pretty low. You know, maybe it could catch higher at like 29s, but I'm still thinking maybe 28.80s. I think it could go pretty far down reasonably. This little pocket right here. IWM, already said I thought it was going to drop. There's not really much else to say about it. I actually said, like, I think it was like 2 or 3 days ago, so I feel not at all surprised. Historically, it's not been this oversold for a while, not since April, which is, I think, before we even went, and we didn't even leave the SOS there. We had just kind of like started it. So it's kind of interesting. Yeah, it's not been this oversold since then on the daily. And then before that, it was October, or November, which was kind of a bottom. So big bottom period. Yeah, big cross right here on this wave. M shape 1, middle, M shape 2. This was a big divergence down on RSI. It would signify that it's probably going to go the other way, and it did. This is a really weak second top. I mean, you can just see it in the volume compared to the first. You've got an M, big M, then you got an M between, and then another big M. I think genuinely that this is like discount time for IWM. I don't think it's going to bleed out and just start crashing. There's nothing to merit that. You know, the idea of like them hurting small caps or slowing it down. Yeah, like it could inadvertently like cause it to have a stumble here, but like a bigger stumble, but I don't think it's likely it goes below like 212s. Or if it does, it doesn't go below like 210, which is like the floor from back here. I still think it looks fine. Yeah, I just think it's needed a correction. I was expecting it to come to like the 226 area. If it dropped that, I think it could go pretty low. I think it could go down to like, yeah, right around here, 218, like you said, Reese. I think that's likely where it's going to try to catch. And if that doesn't catch, it's got gaps down to 212. This, to me, looks possible because of some creek triangulation that like trying to push back through to like 212 again. We'll see. So I don't find that to be particularly surprising. So GME looked like it was like double topping here on that macro line. I don't want to be like a naysayer and say like nothing good's going to happen after just talking about good things happening. But we did mention that like GME may not advance to 38. Like that's been part of the conversation is like, will it? I don't know. It might not, you know. It has a good chance, I think, if it can hold here to go ahead and make that rally and go up going into December to like about 40. And then perhaps we'll see going back up to the 50s or even beyond in January. But right now I'm like, it's just day by day kind of stuff, you know, and it hadn't made the right back test here. So there's nothing really new to say about it that we haven't said earlier in the stream. And then same with AMC. It already did an auto reaction. The auto reaction was measured correctly. We measured it. It did not exceed the auto reaction measurement. It did kind of fall a little bit short of it, but it's there, you know, it's in that pocket. It needs to, after coming through the floor and coming back above it, it has to go back and recheck that and see if bears are going to be able to push through. So I like 412. Yeah, that's a good one, Dizzy. So look, the bear side of this isn't gone. It's not like I'm completely, totally like erasing that from history. It's still there. When we talked about bear side, we talked about coming through, if I can find it. It's always the hard part, right? I think it's on this chart. Problem is I've got like 2 charts per chart. So there's like, some of these are like completely wrong. This doesn't have anything on it. Maybe it was this one. That seems right. So like, we talked about bear side. We talked about coming back up or coming back down through this level here. So this looks pretty similar, right? Spooky, right? Yeah, it's spooky. Did not come as low as I thought. So I had on bear side as low as 375, but I did not measure from here. I measured from, I don't know where I measured from. I guess I measured from the wick instead of measuring from the second top, which is 530, which would have given you the same middle, but it would have given you that higher bottom. So, but the idea was that you'd come back up and reject off of this area and then potentially dive low. So it's very similar, you know, to the bull side. The difference is that you don't necessarily expect it to hold. You expect it to slide back through the floor. That's why I was saying, like, the bear side in this case, it has an advantage right now in that we're below that mark. And I was trying to stress that early in the stream that, like, you really got to get above that. You really got to get above that area right here around 450. Like, you have to hold support and then push above it. And if it doesn't do that, it's just a hook, you know. It's as simple as it can be. So it'll be interesting to see if it holds. I think it'll be really telling the next few days. And even if that's the case, you know, I know that I don't want to mix these ideas too much. I think it can be kind of confusing. But I suppose, and I'd have to just say it outright, just to say it, even if that were the case, in 2021, AMC didn't break down, it didn't start losing its kind of momentum or whatever until December 14th, which would be like similar to us saying that, like, this is the place that it's hooking. It did continue to bleed out until December, like through December. So is it the same? I don't think it's exactly the same, but there is a similarity. Like in 2000, again, in 2000 and, like, we don't hit the bottom at the same spot, but in 2020, there is a big reaction around earnings and then elections, and it does something similar. It comes up and then it creates a top, and then it hooks around the 14th of December. It's kind of like that, and then it starts bleeding out. It takes 2 weeks from December 14th all the way through the end of the month to actually come all the way down to its bottom. And then from that point forward, it's turnaround time until January like 16th, and then it just rocketed. So in theory, even if we were really bearish and we said that I think it is going to go ahead and go for that gap, it's not impossible. That it seems unreasonable perhaps to us right now, but it's really not. The distance traveled in 2020 is actually greater, I would say. It looks greater than from here to the gap proportionally. So I don't love the idea of like marrying them together, like bear and bull, but it's not impossible that if this like broke down and just went into like a full slide going into the end of December, that maybe by about the 6th you could hit a bottom, which is the same as what we saw in the previous. If they're doing that because they want to crush options and stuff, you know. And then, yeah, maybe you have like a takeoff. But that would be like kind of a crazy scenario. Based on the way that this is set up, without that top here, it's really hard for me to make that argument, because the top in 2000 and, well, let me put it this way, like, there's a proper creek in 2020. So it makes sense that it did the big swing and then dropped really low, because the creek in 2020, what I'm doing here. The creek in 2020 goes right through the middle, like, of this zone, and that's really a big part of this, because it's like that's part of the reason why you would say that we kind of ran up, is because we jumped the creek and came back and like rested on it, at least from a sine wave perspective, you know. Obviously the position of the chart is really important, like where it was, what it accomplished. This also had already filled the gap, so there's that argument, like what already filled the gap, so maybe it wouldn't need to be the same. This is really different from where we are now though in that reality, because 2020 has this really steep dive. Like if you jump that creek, you're going to dive really, really far. And that's just not there. Like our current time frame, we got some crazy stuff going on this chart. That current time frame doesn't have that as a likely possibility. So not to say it couldn't happen. I'm just saying, like realistically, like this is the same period because this is the middle of the wave. This is that same period that you'd consider, and it does not by any means look like it needs to go low. It looks like it's kind of as low as it needs to go right here, around $3 or $4, because that's the line. It would have been different, again, had we actually pumped up to like $8, you'd be hearing me say it's dropping real low, because it would have been different. You would have had a creek that like cuts through all this, that goes super, super low. But that's not the case. Like it kept it really flat. Like really, really flat. It's kind of weird. Oh, I don't know. I don't know if I could combine the two like very well, but without some kind of other big push here and then another drop, it'd have to be like a larger structure or something. It'd just be really weird to just sell straight down like that. Well, never say never, right? Never say never. Yeah, anyways. So I guess it's not impossible that could happen. I'd have to like think about that more. I don't have a lot of time left. I only got like 2 more days this week, so I'm ready for holiday. I don't know. You know, it's always a mixed bag on holidays. So you guys are like, no, it's not. Family's great, but family's also family. So family has the unique ability to piss each other off really easily. You know where all your buttons are. You grew up with these people. I'm excited to see family. But my side of the family I haven't seen in a while, a long time. So I'm excited to see them. But it's going to be an event for sure. Yeah, I don't know. I'm not really feeling bad about this. I feel like it looks fine. So I think I'm going to end the stream early because I'm going to have to feed my cats and get some other stuff done today. Okay, feeding your cat's a big deal, Booksy. I got a lot of cats. But also, there's no real reason to like, you guys are like, why not you going to watch the last 30 minutes? I feel like we're going to pick it up tomorrow and have a better idea anyways of like where everything is. So I think it'd be better just to wait. Even if it kept bleeding, I wouldn't be like, oh, anything's different. If it ran up, I'd be like, oh, something different. I'd just be like, okay, let's wait till tomorrow. So yeah, I'm gonna go ahead and peace out today, and I'll try to do a regular morning stream tomorrow. So I didn't stream this morning because I figured it'd be better to stream the afternoon and see what happened after the Fed meeting. And then tomorrow will be a very telling trading session, tomorrow and Friday. Should be good. All right, guys, you have a good one. I will talk to you later.